it's not robotics, it's not even AI. And you'll be surprised to learn that it's the underlying technology of digital currencies like Bitcoin.
In today's video, we are going to learn a little about cryptocurrency and recent developments that have made it a little more interesting and, as some would say, worth it. I will first talk to you guys about what crypto is and then share with you the recent developments and talk about them. We will also be covering what DeFi is, so stick around for that. A lot of people watching this will probably know what crypto is, but for the sake of those who do not, I will just quickly explain what crypto is.
To thank you for watching this video, we're offering you an absolutely free training webinar. Have you ever wondered how to end procrastination and self-sabotage so you can unleash your full potential to live the life you deserve? #1 best-selling author and high-performance coach Peter Sage is hosting a free webinar where he'll teach you how to increase your wealth with less time and struggle, and also how to hyper-boost your growth and success so you can finally break out of any rut you find yourself in. Right now, Peter and his team are offering a free $100 gift to anyone who doesn't find his webinar as the best use of their time within the last 5 years. Now, let's get back to the video.
A cryptocurrency is a digital or virtual currency that is protected by encryption, making counterfeiting and double spending almost impossible. Many cryptocurrencies are built on blockchain technology, which is a distributed ledger enforced by a global network of computers. Cryptocurrencies are distinguished by the fact that they are not issued by any central authority, making them potentially resistant to government intervention or manipulation. Cryptocurrencies are online payment systems that are denominated in virtual tokens that are represented by ledger entries on the system's internal ledger. Various encryption methods and cryptographic approaches, such as elliptical curve encryption, public-private key pairs, and hashing functions, are referred to as crypto. You have probably heard of terms like Bitcoin, and you're wondering what it is. Let me just connect the dots real quick. Bitcoin, which remains the most popular and valuable crypto monetary blockchain, and it was the first. There are today thousands of different cryptocurrencies with different purposes and characteristics. Now that you know a little bit about crypto, let's talk about DeFi, Decentralized Finance. Technology's usage in financial services is not new. Nowadays, technology is used to complete the majority of transactions at banks and other financial services firms. However, technology's function is limited to that of a facilitator in such transactions. Companies must still navigate the legalese of many jurisdictions, competing financial markets, and differing standards in order to complete a deal. DeFi, with its stack of standard software protocols and public blockchains on which to construct them, puts technology at the forefront of financial transactions. DeFi is frequently associated with blockchain and cryptocurrency. However, it has a far broader reach. It's necessary to understand the present status of the financial ecosystem in order to comprehend the thinking processes that led to the creation of decentralized finance. Decentralized finance, in its most basic form, is a system in which financial goods are made available on a public decentralized blockchain network, making them accessible to anybody rather than going via intermediaries such as banks or brokerages. Unlike a bank or brokerage account, DeFi does not require a government-issued ID, social security number, or proof of address. DeFi refers to a system in which buyers, sellers, lenders, and borrowers engage peer-to-peer or with a solely software-based intermediary, rather than a corporation or organization mediating a transaction using software developed on blockchains. To achieve the aim of decentralization, a variety of technologies and protocols are employed. A decentralized system, for example, may be made up of open-source technology, blockchain, and proprietary software. These financial products are made feasible by smart contracts, which automate agreement terms between buyers and sellers or lenders and borrowers. DeFi solutions are meant to eliminate middlemen between transacting parties, regardless of the technology or platform employed. Despite the fact that the amount of trading tokens and money trapped in smart contracts in its ecosystem has been constantly increasing, DeFi is still a young sector with a nascent infrastructure. DeFi is subject to little or no regulation or monitoring. DeFi, on the other hand, is projected to take over and replace the rails of contemporary banking in the future. Now we can talk about the news. I hope this makes sense to you. It should if you were listening carefully. Still, if you do not fully understand, there are multiple resources online that can help you understand this. So like I said earlier, DeFi doesn't have a formal definition, but it usually refers to utilizing the blockchain to borrow and lend via auction markets, to trade in irregular derivatives, to exchange one set of crypto assets against another, and to ensure unique risks.
To thank you for watching this video, we're offering you an absolutely free training webinar. How would you feel knowing that you could pay every bill you have right now as well as any future bills that come in? Commission Hero is a proven system that has helped over 8,000 people earn upwards of $1,000 a day or more. The best part is that there is zero experience needed to get started. In this free training, Robbie Blanchard and his team will teach you the top 3 secrets to how and why this system works, and how it can also work for you. Join the thousands of people who have found success and financial freedom using Commission Hero. Right now, the first 100 people to use the link below will get access to this free webinar. Now let's get back to the video.
Part of the reason for the economic potential is that the blockchain eliminates the need for traditional financial middlemen with their fees and restrictions. Consider the following scenario. You have some money to invest, but government bond yields are too low, and you already have a large portfolio of publicly listed companies. You might put a portion of your portfolio into the Ethereum-based loan auction markets, essentially dumping some crypto into the market and seeing what price it will be leased out for. Although some of these chances are highly hazardous, you may wind up with payouts of 6% or more. Currently, $100 billion may be invested in DeFi. What's more, these systems are quickly expanding. Reliable figures are hard to come by, but DeFi increased 7-fold in only a few months in 2020 to a total worth of $7 billion, according to one account. It's understandable that investors might find DeFi appealing, especially in a world where returns are low and assets are expensive. Consider them decentralized markets in the form of extremely risky juke bonds. To be clear, I am not claiming that these DeFi applications are helpful to society. It's simply too soon to tell. One critique of DeFi is that it is essentially regulatory arbitrage, obviating the need for beneficial rules and limitations in the sake of greater private profit. The longer-term outcome might be a financial economy that is more unstable and prone to recessions, especially if DeFi becomes more widespread. DeFi loans are frequently given to risky, non-mainstream borrowers. But it's also crucial not to mix together other criticisms of crypto, such as that it's only helpful for speculation or that it's harmful to the environment. The important thing is not to let your feelings toward crypto, whether favorable or bad, influence your thinking. Rather, concentrate on one question at a time. And if you're wondering whether crypto is useful for anything, there's now at least one clear answer. It makes DeFi possible. You don't have to agree with every outcome of that reality, but it is a reality nevertheless. Cryptocurrency may be thought of as a Trojan horse for a new and very different financial system. You may assume that US banks are ripe for disruption if you've ever interacted with them and had to cope with their bureaucracy and shoddy software. Other countries' banks may be much more exposed. As DeFi expands, concerns of government monitoring and control will inevitably arise. Nonetheless, it is doubtful that DeFi institutions will be outlawed. DeFi can run on platforms outside of the United States, and neither American nor European officials can stop it, any more than they can stop me from betting on a soccer match online. Keep in mind that microcredit is used by large swaths of the poor world, where loan rates are frequently 50% or 100% on an annual basis. Regardless of whether the new institutions satisfy US authorities in every way, it is probable that some of those nations will experiment with DeFi as an alternative form of credit allocation. Basically, we do not know what the future holds for us, so we have to make smart decisions that have low risk and high turnout. Whether you look to crypto or not, think before you invest. That's all for this episode, and we really hope you learned something new today from the video. If you did, tell us down in the comments section. It makes us feel good and motivates our team. If you enjoyed the video, remember to subscribe if you already have not and liked the video. It takes 5 seconds of your time, but each and every one of you means a lot to us. Until next time, bye!